All right, so let's start with corn. The market's seen a little bit of a pullback here, despite higher crude prices. They want to say traders still keeping an eye on weather developments, beneficial rains expected in Iowa and the eastern Corn Belt over the next week. However, drought conditions remain widespread, with 2/3 of the U.S. currently experiencing some level of drought. That's up significantly from just 21% last year. Meanwhile, in Brazil, the second crop corn is now fully planted, and domestic corn prices have hit a 3-year high. The Brazilian government is even considering raising ethanol blend in gasoline from 27% to 30%, which could impact demand. Open interest in corn dropped more than 18,500 contracts yesterday with low volatility. Kind of unclear if, traders were exiting longs or shorts. One thing, though, is certain: with strong Brazilian corn prices and their harvest still months away, U.S. remains pretty competitive, very competitive on the global stage. Soybeans prices are holding steady overnight in a narrow trading range here. Brazil soybean premiums have risen, bringing U.S. and Brazilian prices nearly to parity. Crop updates from South America show that early soybean yields in Rio Grande do Sul are disappointing, and dry conditions in other regions could make things worse. In Argentina, heavy rains later this week are expected to slow harvest progress. One major surprise yesterday was NOPA crush report for February, which came in at just 177.87 million bushels, well below the pre-report estimated of 185.2 million. The drop suggests that processing plants saw more downtime than expected due to winter weather. Meanwhile, bean oil stocks climbed to an 8-month high at 1.503 billion pounds. On the trade front, President Trump hinted overnight that China Xi may be visiting the U.S. in the near future. If that meeting gets officially scheduled, we could see anticipation of a potential phase 2 trade deal lift bean prices. But for now, Brazil's harvest is in the third and final third here with no major news breaking. Soybeans could stay in a sideways pattern until we find a fresh catalyst. All right, so we have wheat rallied sharply yesterday on growing weather concerns, and prices are higher again this morning. Dryness and high winds continue to plague the southern plains, with little precipitation expected in Kansas, Oklahoma, and Texas over the next 2 weeks. Traders are pricing in additional weather risk. The latest crop conditions reports are showing Kansas wheat rating slipping by 4 percentage points to 48%, good to excellent, while topsoil moisture is short or very short in nearly half the state. Oklahoma and Texas wheat conditions are unchanged from last week, but remain well below last year's levels. Meanwhile, Black Sea region is also trending warmer to drier, adding more uncertainty to global supply. Russian exports for March are expected to be lower as the government works to keep domestic bread and flour prices down. Traders are also watching Ukraine wheat exports, which have slowed in March compared to February. With open interest in Chicago wheat dropping more than 6,000 contracts yesterday, it appears funds are beginning to exit their short positions in that market. If weather risks persist, this could fuel further short covering and push prices even higher.